Hello and welcome everybody. I'm Stephen and I'm a popular investor on the eToro platform. As usual, if you could please like this video and subscribe to my channel, that will be extremely helpful. You can also find out a lot more about me as an investor on my website, which is www.stephenbudgen.com, where I write a lot of different analysis and posts, and you can find out a lot more information about me as an investor. So as usual, today I'm going to be doing a video where I talk to you more about what happened this week in the markets and also explain a bit about how we performed in our portfolio overall and our strategy. So this week was a lot better and we actually performed really well. So our portfolio was up about 2.4% for the week. If we compare that to the Nasdaq, which was up about 1.9% for the week, and the S&P 500, which was up 1.7%, I think that we had a really good week and we're showing good signs of recovery. So we saw the major indexes in the US perform really well this week and also hit new all-time highs, which shows that the economy in the US is starting to grow strength. So in particular, the sectors that did well was growth stocks and high technology stocks, as well as healthcare and also discretionary spend stocks. So we saw the earnings of Nike, which was particularly good, and we saw a big surge in the price of Nike last week. So some good signs overall from the economy in the US. We also saw some really good data that came out of the US as well. So we saw that jobless claims actually went to a pandemic era low, which shows that there's a lot of demand in the market for services, and it also shows that kind of leisure and tourism sectors are beginning to open up and employ more people. We also saw really interesting manufacturing data come out of the US, which was really high as well, which shows that there's a lot of activity that is taking place. House prices in the US also continue to go higher, and we saw some key data that was actually released to say that in May that the house prices had continued to increase. A lot of this again could be down to inflation and a lot of people looking to move now that the COVID restrictions have been lifted. And also this shows as well that there could be some weakness in the dollar due to inflation. In the US, on the flip side of that, we all know over the last couple of months that the economies have started to open up again, and many restrictions in the US have started to be lifted, such as wearing masks in public areas. So that has been overall evolving, but we've also seen an increase in the number of cases in the US to do with the Delta variant, which originally came from India, but is starting to spread around the world. And actually it has a very high infection rate. And it's something that we need to keep an eye on, because this week in the US, they actually released some data as well to say that the number of cases of the Delta variant had been increasing in the US, and particularly in states which they had a lower vaccination rate. So the good positive thing about that is that there was also some US health officials that released a statement this week to say that most of the vaccines out there vaccinating US citizens could easily deal with the Delta variant. And that they worked very well. In addition to that, Johnson & Johnson also released a statement as well that they had trials looking at the Delta variant, and that the Johnson & Johnson vaccine worked very well against the Delta variant and only had a slightly less efficacy than the usual strain of the coronavirus. So this is kind of good news moving forward, and I think as more and more of the population is vaccinated in the US, then we should start to see a slowdown of the Delta variant cases. Over to Europe now, it's a slightly different story. So in Europe, most of the major indexes in Europe were slightly down for last week. And a lot of that, again, is to do with the Delta variant, which is much more widespread in Europe. So much so that some countries, such as Portugal, have started to reinstate restrictions, and they've actually put it back in place, a curfew that they had previously. In addition to that, actually in Europe now, it is actually said that 60% of citizens have actually been vaccinated, and they expect that to go up to 70% in July, and they're working now on vaccinating younger sets of the population. So also hoping that a lot of these cases actually start to drop off as more and more people are vaccinated. In addition, in Europe as well, they also have implemented from the 1st of July a COVID vaccine certificate, which is actually been able to be used by 50 member states of the EU. Jobless claims also in Europe have reduced, like in the US, and a lot of that again is to do with many restrictions being lifted in European countries. We're also seeing an increase again in inflation in Europe, and there was some actual figures released last week that's saying it's creeping up pretty close to the target of 2% in mainland Europe. So that's something to keep an eye on as well. As we look at China now, overall last week stocks fell slightly, and there was also a statement by the People's Bank of China which said that they were going to keep macro level ratio stable. And this indicated that they do not plan to do any fiscal tightening policies, which could be very good for the expansion of the economy. There was also some housing data which was released last week, and in particular housing data which came from Shenzhen, which was a region in China that had been particularly affected by overheating house prices. So in May, it actually said that the house prices in Shenzhen had actually decreased somewhat. And we have known for the last couple of months in particular that China has been doing all it can to try and stop an overheating housing market. And this is early signs that it might start being working. So now I'll move on to the top 3 performing stocks in our portfolio last week. In number 1 was a company called 𝗳𝗓𝗯, and that actually grew over 9.34% last week. Many of you will know that I added 𝗳𝗓𝗯 to our portfolio just a few weeks ago, and I've been slowly edging into that position. 𝗳𝗓𝗯 is a really great company which combines a really good restaurant experience and a customer focused approach. That combined with a lot of technological innovation in the restaurant industry. And I have really high hopes that this will be a really good performing stock for us in our portfolio. The second best performing stock in our portfolio last week was Coinbase, which rose over 7.21% for the week. And Coinbase in recent months hasn't performed very well. And a lot of the reasons to do with that is because the crypto market has fallen over the last few months. However, Coinbase is well placed as the leading crypto exchange, and I think that as crypto prices start to increase, that Coinbase share price will also move with it. And I think Coinbase is in a very unique position because it actually makes a lot of its profits from the volatility. So when the volatility is high, it also makes money when the crypto prices are going up. And on the flip side, when crypto prices are going down and people are selling or they're buying the dip, they're also getting great profits from exchange fees. So I expect Coinbase to do really well in the long term as crypto takes more and more place in mainstream society. The third best performing stock in our portfolio was Apple, which rose over 5.15%. Apple was a big benefactor of a rise in technology stocks last week, and also there was quite low bond yield rates, which was very good for growth stocks overall. And I think, as we know, Apple is a behemoth, and it's a company that is really good to have in our portfolio, as we know that they're going to always be number one for innovation, and they're going to look to expand their business more and more over time. I wanted to spend a little bit of time explaining more about what's been happening in Bitcoin and crypto overall. I've actually been really impressed that over the last kind of 6 to 7 weeks that Bitcoin has managed to hold this $30,000 floor, and the range up to about 40,000. A lot of things have been thrown at Bitcoin and crypto overall over the last few months as we have seen the crypto prices reduced. There's a couple of major things that we know has happened. So one, there has been some environmental concerns that have actually been raised. And the second being, really importantly, over the last few weeks, has been the China increased regulations on crypto, and really more to do with the mining of Bitcoin in China. So we've actually seen that over 90% of Chinese miners have been forced to stop their operations, and many of those are now moving over to other geographies such as Kazakhstan and North America. And we've actually seen a big drop off in the hash rate. And this has shown that we've actually had a lot of hash rate decreases. And as many people will know, in the Bitcoin network, every 2 weeks, something happens called a difficulty adjustment for miners. And actually this week we saw one of the biggest difficulty adjustments in Bitcoin's history, where it actually got about 27% easier to actually mine Bitcoin, which is to the advantage of the other mining pools throughout the world. However, I expect hash rate to increase as these Chinese miners start to reposition themselves in other jurisdictions. There is a lot of speculation about why China is cracking down on crypto overall. And one of the key theses is around the fact that China is releasing its own digital currency called the digital Chinese yuan. And although I think that there is a case of this where they want as much control as they can over the future currency, I think a lot of this is to stop the outflows of money from China to other countries. As we all know, it's very difficult to move money from China to other countries. And actually the miners are able to do this in a way because what they're actually doing is they're paying for electricity in China, and they're converting the mining rigs to actually mine Bitcoin rewards. And then this can be easily changed into other foreign currencies or kept into Bitcoin. So I think that this is a very interesting way for China to be able to control the outflows of money out of their economy. If I also now look at on-chain metrics for Bitcoin, they also show a lot of positivity. So last week, over 24,000 Bitcoin were actually moved off exchanges and actually placed into private wallets. This is a really good sign because it shows that these coins are generally going over to wallets which people plan to hold for the long term. When we see the opposite and we see a lot of Bitcoin actually move over to exchanges, this is often the time where they start to be sold. We also see a really good on-chain metric where we are seeing a lot of whales accumulating Bitcoin, and we actually saw an inflow of 67,000 Bitcoin which were actually bought by whales last week. So this is really showing that there is a big demand for whales or for long-term hodlers of Bitcoin, and they've actually been using this opportunity to actually acquire Bitcoin from some of the speculators and the short-term holders. I'm overall very bullish on Bitcoin and crypto in general over the next few months. And I think that Bitcoin and crypto has shown a lot of resilience, especially in line with the amount of FUD that's actually been subjected to. And I think that all the on-chain metrics actually point to the fact that there's still a huge amount of interest in this space. And I'm expecting more hedge funds, more corporate companies, and again, more nation states that are going to get involved in Bitcoin, especially in that kind of South America area, as we have seen El Salvador actually adopt it as the legal currency in El Salvador. And we've also seen a bill which has actually been submitted from Paraguay, who expect to follow suit within the next few months as well. And what I think will actually happen is I think that we will see an increase in price. And I'm actually expecting by the end of 2021 for us to be over $100,000. And that might seem like a very ambitious statement. But as we see increased inflation in the US, there will be a lot of people that want to put their money to work in Bitcoin, in a scarce asset. And I think we will see a wall of buying pressure in Bitcoin. And this will cause the price to continue to increase. And there's not going to be many people that are going to want to sell their Bitcoin. And if we combine that with what's happening in the global economy, where we're seeing increased inflation, there's going to be a flight to safety, and a lot of funds are going to put money to work and buy Bitcoin as a scarce asset. We're also seeing that bond yields are very low as well. So it's very important that these large hedge funds and big money managers actually get a good amount of alpha for their investments. And there's really not a better investment that they could have, considering the macroeconomic circumstances that are actually taking place, than to hold an amount of Bitcoin in their holdings. I was also a guest this week on a really great podcast called the Copy Traders podcast, which is hosted by 𝗃𝗶𝗀𝗀𝗀𝗀. It's a really great podcast because what it does is it allows you people to be able to understand more about copy trading on eToro and what they need to look out for. He does a lot of great interviews, not only with popular investors such as myself to get to know your popular investor a lot better, but also does interviews with other copy traders and also content producers about eToro. So I will drop a link to that interview and you can find out a lot more information about me. And it was a very light-hearted interview as well, so you can get to know me a lot better. Thank you very much for listening to this video today. And as usual, if you have any questions, I'd be happy to answer those. Until then, have a great week ahead and I will update you again soon.